Ever find yourself wondering what differentiates the primary market from the secondary market? Well, today's your lucky day because we're going to delve deeply into these often misunderstood terms and elucidate every last detail. Now, let's set the stage for our discussion. Picture this. Imagine you're an artist. Not just any artist, but a true artisan. Over the years, you've honed your craft, and after countless hours of meticulous labor, you've created a masterpiece. It's celebration of your dedication, your talent, and your vision. Now, having birthed this beautiful work of art, it's time for the next stage, selling it. This is where the story gets interesting. After preparing your masterpiece, you're ready to introduce it to the world. You're eager to see the fruits of your labor and the appreciation for your work. You put out the word that your masterpiece is for sale, and soon enough you find a buyer who's interested in your work. This buyer, they understand the value of your art. They appreciate the dedication and hard work that has been poured into creating this masterpiece. You and this prospective buyer start negotiating a price. It's an intricate dance of valuing art and commerce, where you both try to reach a mutual agreement, a sweet spot that suits both parties. The negotiation process can be long and tiring, but it's a necessary process. After a series of discussions and deliberations, you finally agree on a price that reflects the value of your work. And voila, the transaction is complete. The masterpiece you so lovingly created now has a new home. This is not just about selling a piece of art, it's a metaphorical representation of the primary market in the stock world. In the primary market, companies create and sell new securities to investors for the first time. It's a unique process, a one-time activity where companies bring their securities to the market. This process allows companies to raise funds directly from investors. These securities could be stocks, bonds, or any other financial instruments that help companies raise capital. This transaction takes place directly between the company and the investor. Here, the is akin to the art buyer in our earlier narrative. The investor, like the art buyer, understands the value of what they are purchasing. They recognize the potential for growth and the possibility of returns on their investment. And the companies, much like the artist, are offering something they have created, securities. Consider the primary market as the birthplace of these securities. It is where they are conceived, created, and then sold for the first time. It's the starting point of a security's life cycle, the genesis of its journey. It's an essential part of the financial world because it's where companies raise capital for their business operations. And this capital, this lifeblood of companies, it allows them to grow, expand, and thrive. In this complex dance of creation, valuation, sale, and acquisition, companies and investors play critical roles, shaping the market, influencing economies, and creating opportunities. And the primary market, much like the artist's studio, is where it all begins. It's where the magic happens, where companies meet investors, and where new securities are born. And that, my friends, is the beauty of the primary market. So the next time you think of the stock market, remember our artist and the primary market. Consider it as the birthplace of securities, where companies raise capital for their business operations. Now, let's say the person who bought your masterpiece decides they want to sell it. They find another interested party and sell the piece for a new price. This is comparable to the secondary market. In the secondary market, investors buy and sell previously issued securities amongst themselves. The companies that initially issued the securities are not involved in these transactions. The secondary market is where most stock trading happens, with the New York Stock Exchange and NASDAQ being prime examples. To keep the analogy going, the primary market is like the art studio, where the masterpiece comes to life for the first time. The secondary market, on the other hand, is like the art gallery, where pieces change hands between art enthusiasts. Now, let's distill the key points. The primary market is where companies issue new securities directly to investors to raise capital. The price of these securities is set by the company, and once sold, the money goes directly to the company, minus any fees incurred during the process. The secondary market is where investors trade these securities amongst themselves. The companies do not receive any capital from these transactions. Here, the price of securities fluctuates based on supply and demand dynamics in the market. In essence, the primary market is all about creation and capital raising, while the secondary market is about liquidity and price discovery. So there you have it, the distinction between the primary and secondary markets. Remember, understanding these markets is essential to navigate the stock market landscape wisely. So keep learning, keep exploring, and soon the world of stock trading will seem less daunting and more exciting. Until next time.